you had the very lofty price target of Bitcoin, I think, at 500,000 by 2030 and ETH at 40,000. First question is, do those targets still hold for you? And then the second question is, how do you think we get there?
Yeah, so I'm 100% still with those targets. If anything, at some stage in the future, I suspect those targets are too low, not too high. I guess is my starting position. So for Bitcoin, which is a totally separate animal to Ethereum. And so quite frankly, if I was covering a different asset class, it would be like me covering gold and NVIDIA. Like they're
Sure, yeah.
quite seriously that different. So for Bitcoin, I compare it against digital gold. So hence the gold example. I think there the main story is as investors get access to Bitcoin, which before 2024, before the ETFs, was much limited compared to where we are today, right? So over time, I think that means that global investors who quite frankly take a number of quarters or even years, like large-scale pension funds, I'm thinking here, not retail amounts, but large-scale pension funds take a long time to get invested in a new asset class, which is what this is. And so since the ETF started now 2.5 years ago in the US, each quarter, those running the ETFs would run around to the pension funds that are long only, very long-term investors and say, hey, have you considered this new asset class yet? Yes, no. And so it takes some time to go from zero investment to optimal portfolio investment. And if you then just compare historically Bitcoin versus gold and think about where the optimal portfolio should be between the two on returns and correlation and volatility, so simple Markowitz style stuff, you should be a lot higher, even with Bitcoin vol where it is today. And then if you think Bitcoin vol goes a little bit lower over time, which I think is a reasonable assumption as we go from retail hands to institutional hands, we've already seen a bit of that. But if Bitcoin vol keeps going lower, then you're even shorter Bitcoin in that optimal portfolio. And that's simplistically how I get to that 500,000 target, which, as you quite rightly mentioned, I think the medium-term target is easier than the shorter dated one because that tends to be thrown around by so many other factors. So I'm very comfortable with that 2030 500K, and we'll come to some of the shorter dated stuff in a second. For Ethereum, it's more about use cases. So interestingly, all the stuff that's happening in the background in Ethereum space is improving. So I use an analogy, which I put out a note on this recently, which was Jeff Bezos in around 2020 reflected on the 2001 tech bubble bursting. And his quote was, I could see the Amazon stock price going from $113 to $6, but all my internal metrics were going up. And I think Ethereum is seeing something similar now, right? So the token has traded badly. I think we all have to acknowledge that the last few years outside of the large buying by BitMine and SharpLink in 2025. But all the internal metrics are going up. So if you're a believer that at some point in the future, a large amount of the financial markets is on chain, it's very probable a lot of that is in Ethereum layer 1 or Ethereum layer 2 solutions, and therefore the value in the ecosystem should increase over time. So again, that's my medium term. It's probably even more difficult to predict the shorter term price fluctuations for ETH than it is for BTC. But I think that medium term story, which has to do with use cases and users, which is all coming from TradFi now, stablecoins, tokenized real world assets, that's just getting started. And over time, I think that's the real driver of that ETH 40,000 2030 target.
I just want to return to the Bitcoin target for a second because, so I've been in the space since about 2017, and for a good maybe 4 or 5 years from when I joined this space, if you got any sort of institutional interest, it would literally move the price. I mean, it was an incredible time where any interest, any partnership, any sort of movement was interesting to the industry. So for me, perhaps I'm out of sync now, but you're at Standard Chartered, a 172-year-old bank, walking around saying Bitcoin's going to 500K. Are you still having difficult conversations internally, or is it now just at the point where, I think the ETFs in the US were kind of a watershed moment for Bitcoin. Is it now that that's just not that crazy to be saying and people are fairly accepting of it, or are there still difficult conversations with skeptics?
So the last 2 or 3 years, how it's kind of gone in banks is, let's say before 2024, probably a chunk of people had heard of Bitcoin, but then with the ETFs, by the end of 24, it's like everyone had heard of Bitcoin, right? And a lot of people will at least pretend to tell you what it is, right? So you then had 2025, the stablecoin summer, which has been a massive transformation as well. For me personally, I guess gives a bit of a gauge on this. Up until the end of 24, or until Trump 18 months or so ago, it's fair to say I'd built a bit of an external brand talking about Bitcoin and Ethereum and other stuff that's volatile, which is great. But internally in the bank, the interest was less, right? So we didn't at that time have product. But then with the stablecoin summer from last year, everyone in the bank wants to talk to me. From the CEO, Bill Winters, down, please come and talk to us and have dinners and client conversations, etc. So the drive has literally gone 180 from external to internal, primarily actually because of the use case stuff. So banks really care about stablecoins. They really care about tokenized other things. And that's where, quite frankly, banks and asset managers are kind of pushing in that direction. So let's say the use case. The interesting part for Bitcoin, to circle back to your direct question here, is as we get more users and use case of digital asset technology, they'll then turn around and say, well, hang on, I don't have an investment in this space. So why don't I go into the largest, most liquid thing about, which is Bitcoin, right? So it should circle back when we get more users of DLT to more investors of DLT as well.
I love that. And it's still slightly jarring to me to see that unfolding after all this time. But I mean, it makes perfect sense to me. I do want to return to the difficult kind of short-term predictions. Standard Chartered has adjusted the price targets for Bitcoin and Ethereum for 2026 a few times this year. What did you not factor in or not predict in the first prediction, that price prediction, that you're now having to factor in?
Yeah, I think it's fair to say that I believed that the 4-year cycle theorists related to Bitcoin would be proven incorrect this cycle on the back of ETF flows, essentially, and also what the digital asset treasury companies were doing primarily in 2025. So I have to say I was wrong there. Partly, I think it was coincidental timing. So the 126K high for Bitcoin was October the 6th last year. And at the end of that week, Trump had the tweet around tariffs on the 10th, just after market closed, of course. And that sort of started this downtrend. Now, if you're a 4-year cycle theorist, that was perfect timing, because that was 18 months after the April 2024 halving took place. And so you can look at all the past charts and say, oh, look, we've seen the high. So it sort of becomes self-fulfilling. And because a lot of this market is driven by retail and sort of whales, et cetera. So again, it became marginally self-fulfilling. So I have to say, hand up, I had that wrong. I didn't expect that to happen late last year. What it probably means is, for the second part of this year, is if those 4-year cycle theorists are correct, then they'll all say, well, in Q4, we're going to base, because in previous cycles, we've done that 12 months later, right? So it's always been a Q4 base afterwards. And we can debate how far we go. Perhaps we've even seen the low already, which I think is possible. But if everyone starts to now believe that Q4 is going to be the low for Bitcoin, and we get through the IPO summer, so we had SpaceX, we're going to get a couple others in the next few months, probably by the end of September, they're all out of the way. People will then start preempting the Q4 low that the 4-year cycle theorists believe is true. And we can either have Clarity Act or SEC and CFTC guidelines by roughly the same time, I think is probable. And so you end up getting a base probably just before Q4, right? Because people preempt what they think might happen, is normally what financial markets do. So actually, we've either seen the low already, or perhaps we see it in September this year for Bitcoin. And then, quite frankly, I think we're off to the races, and I have a target end of this calendar year of 100K, which I think could still be quite achievable.
Am I reading you correctly in that you still think the 4-year cycle is no more, it's gone?
I think over time it makes sense that it has less of an impact. This time I thought it would be gone because of the ETF flows. Presumably it's because ownership is still, the vast majority is still retail, not institutional. Now over time, so let's say when we get to the next 4-year cycle, it's probably fair to say the percentage holding by institutional will have increased, right? So Bitcoin will go more institutional, less retail, in the same way all other assets have done over time. And so then again, I'll probably be predicting in 4 years from now, there is no 4-year cycle. So let's see, I'd say the tops and the bottoms of the cycle are definitely getting compressed.
Yeah.
Like the 126K high wasn't really a very exciting high. And I think the low will not be a massive capitulation this time for the same rationale, right? So you're kind of condensing, if you like, at a minimum, the cycle highs and lows, and volatility will come off as a result of that as well, medium term.
There is one more thing that I've noticed that you were bullish on, which I can't say I've seen many institutions talking about, which is Uniswap. Can you give us the thinking behind that? Because you had a pretty high price target for that too.
Absolutely. So the Uniswap and Aave, which I also published on last week, thesis is essentially, and I can see this from inside a bank, right? So we've had stablecoins, that's great. Stablecoins, I think, just keep increasing over time. I have a large target on that. The thing that's just getting going is tokenize everything else. Yeah, so it's money market funds, it's going to be equities, it's going to be commodities, right? So I think that space also increases massively. And I predict that tokenized non-stablecoin real-world assets go to $2 trillion in about 2.5 years from now. If that's true from a current level about 30 or 35 billion, you have this massive amount of new assets on chain. So let's call that input number one. Input number two is of the real-world assets, including stablecoins that are on chain today, only 3.5% of those are used in DeFi protocols.
Right.
Yeah? And so my thesis here is that over time, there'll be a lot more in terms of percentage also plugged into DeFi protocols. And quite frankly, the protocols like Uniswap or Aave that are, let's say, relatively small cap compared to the layer ones are going to get this massive increase in throughput forced through, and they're scalable in a linear fashion. Yeah? So today, if anyone looks on DeFi Llama, you'll see the amount of real of DeFi assets outstanding. It's like 75 billion or something like that. I think that number 37x's by the end of 2030. So basic maths from my publication now, it's 2.6 or 2.7 trillion dollars that I had instead of 75 billion today. So a 37x increase. Yeah. Now, picking winners is difficult. So you could argue, well, hang on, maybe it's not Uniswap, maybe it's not Aave. But I can tell you, sitting inside a conservative 170-odd year old organization, as you mentioned a moment ago, I think it's very likely that banks like ours and others like asset managers will choose trusted, long-standing names that have been a bit battle-scarred.
It is a big part of your job to look for red flags and things down the road that could go wrong. Are there any areas that you're worried about or concerned about that could be a problem going forward?
That's a great question. So in terms of, let's say, macro drivers, so we've had, obviously what's been going on in Iran has been problematic. So we have had some negatives on the back of that. So let's say geopolitics, touch wood, won't get worse. I mean, who knows? But let's assume geopolitics won't get worse. We've had confusion around the Fed with, new leader at the Fed, how that will play out. I suspect most of those fears are done now, and actually we'll end up getting some positivity on the liquidity or other side from the Fed at some stage. So I can't really see much that could go wrong there. I think it's fair to say. You could get some use case style problems, I suppose. Obviously, we often have hacks on bridges, or mostly they tend to be linked to the off-chain stuff, like the on-chain things tend to be secure, but there's off-chain issues like we had in April with the Kelp DAO incident. But actually, quite frankly, the uptake beyond that to create solidity, if you like, within, or solidarity within the DeFi community, I thought was extremely positive. And also some of the risk metrics that have come on the back of that. So again, there it's difficult to think about how things could go wrong. Like, you never want to say this is a heads I win, tails I don't lose trade.
Sure.
But it sort of feels that way, right? So, I mean, everyone was running to buy the highs, 12 months ago. We're actually now, I think, accumulating assets at these levels is extremely sensible medium term. But of course, everyone's been buying SpaceX.
Are there any narratives right now that you're looking at that you think perhaps aren't getting really enough attention?
Yeah, I'm going to go back to the DeFi piece. So I think it's fair to say in my research, I always try and be, let's say, 1.5 to 2 steps ahead.
Yeah.
So I feel like my job is to lead the market in thought piece, and also, quite frankly, lead builders of stuff in our bank in that space, right? And so early last year, I started writing on stablecoins. It was obviously going to be a big deal for 2025. Now I'm deep diving, tokenized everything else, and DeFi protocols for a reason. I think that's the next big space where we get large scale generational wealth opportunities, quite frankly. And it's because most people don't understand step 1 or 2, that it's difficult to see step 3 or 4, which in this case, in my mind, are the on-chain banks, the on-chain exchanges, etc., right, which I've written about so far. And so I think that's the real leverage point, if you like, of tokenized everything. So if you have a thesis that everything in TradFi gets tokenized to one degree or the other, and I'm obviously relatively bullish on that, then the money has to go somewhere. And so I would encourage those out there to look at what tokenization is, how big it could become. And it's difficult for people to think in exponentials, right? But if you say, we're here and we could go here, which is a dramatic change in the next few years, think about where the value is going to lie. And although I'm also very bullish Ethereum, which we touched on, differently to other off-chain versions of this. So I think often about Ethereum is sort of like the iOS in your phone, right? So which we all have in our pockets, 2 in my pocket, right? Now, in iOS's case, Apple is a very strong corporate brand, and so they take almost all the value. And so the apps that are on your phone get little value. In blockchain space, Ethereum operates in the opposite fashion. It's an open source, open community. So it's reasonable to assume that the app equivalents, which are the protocols, should get a chunk of value. And so given the relatively small market caps of those, that's where I think people are missing a trick today. And in a couple of years from now, they could be those 30, 40x targets that I've been putting out.
Jeff, that was a fantastic conversation.
Pleasure.
Thank you.
Thank you.